All right, everybody, Kelly here, and I want to share something with you that's going to affect, especially here in Central Florida and the Clermont market. This is going to affect people that currently have a mortgage or will be applying for one, and you have fantastic credit. You've got a good credit history, solid, stable income. You're going to be able to partake of the best interest rates, the best programs, because you've shown credit worthiness. In the past, that was seen as something to achieve. That was a goal to achieve. And if you got there, you were rewarded by having lower payments. You were rewarded by having access to programs that not everybody would have access to because of credit history, right? And there seems to be some misunderstanding in today's economy on what that means. Well, not going to get political. It's not the purpose of this video on my channel, but I do want to say that the Biden administration is now prepared to hike payments for good credit home buyers to subsidize high-risk mortgages. Let me share with you guys this recent article by the Washington Times. So this article is basically stating that home buyers with good credit will soon encounter a costly surprise. A new federal rule is forcing them to pay higher mortgage rates and fees. Now watch this, guys, to subsidize people with riskier credit ratings who are also in the market to buy homes. Now let that sink in. If that stands without opposition and becomes law, this is going to take an already feeble, weak mortgage market. And in my opinion, it's going to bring a crushing blow. It's going to bring an atmosphere to people that have really strived to make their credit scores exemplary. It's going to bring an attitude of them now having to subsidize people who have not practiced fiscal responsibility. Now, the fee changes will go into effect May 1st. And by the way, this is one video I want you to comment below. I want to hear your thoughts on this. Should credit-worthy Americans who have done everything they can, they've crossed all their T's, dotted their I's, made their payments on time, right? They've achieved the American dream. Should they be penalized for people that maybe are not as fiscally responsible? They're not making their payments on time. They have shown a proclivity to not stay within the lines of what it takes to be fiscally responsible. Should those people subsidize the other group of individuals? Comment below and let me know what you think. Now, the fee goes into effect May 1st, and the federally backed home mortgage companies, Fannie Mae and Freddie Mac, will enact the loan level price adjustments, or LLPAs. Now, the mortgage industry specialists say home buyers with credit scores of 680 or higher will pay, for example, about $40 per month more on a $400,000 home loan. Now, you might think, well, $40 is not that bad. Remember, the majority of homeowners are taking 30-year loans out. Home buyers who make down payments of 15 to 20% will get socked with the larger fees. The new fees, and we did the math, and it looks like on a 30-year note, people with really good credit that have done everything they can to live and be fiscally responsible, they're going to be hit with a tax on a 30-year note of $14,000 to $17,000 to subsidize people who have not proven to be fiscally responsible. Now, lenders and real estate agents say the changes will frustrate homebuyers with high credit scores and homeowners seeking to refinance because the rule punishes them for their relatively strong financial positions. The changes do not make sense. Penalizing borrowers with large down payments and credit scores will not go over well. So guys, this law is going to take effect in just a few short weeks. While I don't think it's going to be the death knell for the housing market, I think this is another bad move by the Fed, by the housing and urban development, by the federal government. I think this is not a direction they should be going. You don't get a participation trophy in the form of a mortgage if you've had a bad payment history where you are now equivalent to somebody who has taken the time to make sure that their house was in order. Anyway, just another example of bad policy. Time will tell as to what's going to happen with this. So guys, what do you think? Drop your comments below. I'd love to hear your position on this. Now, if you are thinking of moving to the Central Florida market, I'm going to leave my contact information in the description, and I'll pin the comment. If you're buying a home here within, say, 50 to 80 miles of Clermont, reach out to me. I'll set you up on some home searches. I will help you guys to weed through what's going on in the market. And guys, as always, if I am your buyer's agent, you can get up to 25% of my buyer's agent commission to utilize for closing costs or interest rate buy downs. And if you're selling a home, go ahead and reach out to me and let's talk about my variable commission program. Guys, I want to make sure if you're selling a home and buying a home that you keep more of your money in your pocket. All right, that's it, guys. If you haven't already, hit subscribe and the bell. Stay tuned. We've got a lot of videos dropping in the next few weeks. And again, I want to hear your thoughts on what you think about this new law penalizing people getting mortgages or current mortgage holders, penalizing them for good credit. Good idea? Bad idea? Comment below.